Good afternoon and good morning to everyone that's joined us from overseas. As always, we're just going to let everyone join, grab a coffee, cup of tea, maybe something a bit stronger if they want to, so that we can start today's webinar. So I'm going to come off camera and I'm going to pass it over to Neil Michael. Thank you.
Perfect. Thanks, Mel. So yeah, just I guess so you know who we are, and thank you very much for joining. So I'm Neil McAllister. Been with UKG for just over 2 years. I think there's a few of you on the call that probably know me from past lives. So my role at UKG is basically I support any conversations with any European headquartered organization around global payroll. And part of that component is obviously the global payments piece that sits as part of the solution that we offer. I'm joined by Michael, my esteemed expert in the room.
Hey everyone, Michael McHale. I don't have a neck in that picture, but I actually do have a neck. Nice to meet you all. I'm a payment solution architect that works alongside Neil in UKG. I've officially been with UKG 2.5 years now, but it's probably 3.5 years as I worked alongside them as their payment partner. So about 3.5 years in the role, and I do all things payments. So trying to match exactly what happens in the payroll to a payment solution, trying to give much automation as possible. So looking forward to discussing the various topics today. And like Mel and Neil said, any questions, queries along the way, please throw them up. I'd love to have it as interactive as possible.
Yeah, absolutely. Yeah, so feel free to ask questions. This is not in any way a sales pitch. This is an informative conversation, hopefully as two ways we can make it. What we're going to cover today is really, I'm just going to talk through a little bit of sort of in a light-hearted way, the sort of the history of getting people money in their pockets ultimately, and the various iterations of that through the ages. And then we're going to pivot into talking around the future of making payments, and then segue into the solutions that are available today and what might be available in the future, and then talk about things like some of the more sort of left field options that are available to you in the market. I'm going to touch on things like AI because why wouldn't you? Everybody's talking about it. We're going to touch on things like fraud, and some considerations on paying contractors and kind of non-direct staff and things like that as well. So feel free to chuck questions in the chat. Feel free to put your hand up, whatever medium is open to you. But yeah, let's get started then. So the very early days, back when everything was in black and white, you'd turn up in the field, you'd do a day's work, and you'd get handed a bag of apples or a bag of potatoes or a bag of carrots or whatever was on hand as payment effectively. So it's quite ironic, in my opinion, that that kind of earned wage access has kind of come full circle almost, where people now want access to the pay as and when they do it, which is pretty much the earliest incarnation of payment for work, effectively. And then things moved on, and employers started giving their employees money instead. So rather than giving goods, they'd have to go and sell themselves to get the money. It made sense just to give them money in their hands, so they come around with a little brown envelope with some cash in it. And I remember getting paid when I was a postman doing work at university, getting paid cash in a brown envelope like this. So this was very much, the next iteration of it. And then the first concept of self-service arrived, where employers kind of clocked on to the fact that they didn't necessarily have to go to the bank themselves. Instead, they could give you a piece of paper, like a check, where then they're outsourcing the process of you going to the bank to get your money, to get it back into your pocket. So that kind of early self-service piece with writing checks and stuff still exists. Obviously, in the US, it's still, if you don't have direct deposit, it's still a very common mechanism to get paid in the US, for example. And then, of course, the banks caught on to this, and the employers and the banks realized that actually we could just let people go and get their own money. We'll put the money directly into the bank. And then this all kind of spawned what the modern day practices are today, really. But all of those kind of historical mechanisms of getting people paid were effectively local solutions for local people. They're point to point, country to country, site by site. So it's quite a straightforward transaction in that case. You know, you do a piece of work, you work a number of hours, there's an agreed amount of money that needs to change hands depending on the amount of hours you work, and that's what you get in your pay packet. That all changes completely when we go global, right? Because every country has its own legislation. As you know, every country has its own rules, policies, quite severe restrictions in some cases, which I'm sure we'll touch on later. So yeah, I guess throwing over to you, Michael, in terms of kind of when we go global, what sort of factors do you think are open for consideration if you're looking at a global payments model?
Yeah, it's a good question. I think that's where a lot of people are at this moment in time is going, right, I have 5, 10, 15 different countries that I deal with. And how do I suppose, go about doing that the best in the most compliant, low risk or risk-free, you know, fraudless way? So I suppose what you need to do is internally first find out exactly what you're doing well and what you're not doing well. So go through I suppose, the various parts of the what's on the slide here. So how mature is your treasury department? Some people will have 2 or 3 people in the treasury department, and they will have 4 or 5 bank accounts globally, and they work the payroll payments from the 3 people and the 5 bank accounts. So does that solution there, does that mean that you are in higher risk of making the payments on time and in full? Does it mean you're exposed to different payment methods that might expose you to fraudulent activity? Are you comfortable, I suppose, what you have in place is, I suppose, the right solution for yourself? So an internal check. When you do that, you check your banking network, as in, how does it all work? How do I send the funds? Is it the most efficient way of moving money from different parts of the company out to the employees and tax bodies? And seeing, is there any improvements that you can make there? You couple all that with your local legislation. So in your treasury department, they'll say, we can make these payments to wherever you want, but is that compliant with local legislation? So that's I suppose, an internal question that you ask yourself. Have we got the expertise to understand this? If not, is your payroll provider going to give you assistance and guidance into what to do, what not to do? And again, if you're concerned about that being, a gap or a problem, maybe it's a service that you outsource to somebody who knows how to do it. And then put that all into the last 2, which is, I have an ideal solution. I'll have an ideal solution that's risk-free, and it's going to, save me a lot of time, effort, and hassle. But is it the quickest? Is it the most efficient? And does it cost a hell of a lot of money to do? So while I suppose all these solutions can be solved, you have to satisfy yourself with, firstly, the time and effort that you internally have to put into it, the time it takes to make those payments, and then the overall cost that it might take to get this all done. So again, as we know, fast might not be the best thing. That might be very costly. It might also not arrive the way you want it to. Slow might arrive exactly the way you want it to, but it's very slow, so that puts pressure on your payroll calendar. And then fast and efficient is usually extremely expensive. So you have to marry all of those things together, I suppose, in order to land on the ideal solution. Neil, if you want to flick on, I
Yeah,
suppose,
I was gonna
yeah.
say, so what is available? So
Hmm.
if I'm going out to market today, as it stands, to
Yeah.
overhaul my payrolls, what's out there? How do we approach it?
So I would categorize it in 4 boxes. The DIY, where you have a really strong treasury functionality, or you have really small headcount. You're saying, look, we do this all internally. So you can do it yourself with local treasury teams, local bank accounts, using bank files, or payment listings. That host-to-host solution is also built yourself, but again, host to host, as people that use it know, it's very efficient, very effective, touchless, a lot of automation, but you have to build out the connectors between the payroll provider, the local bank accounts, and how that works, and who's willing to do it, and how long it'll take to get set up. Once set up, fantastic. But you have that option of DIY. So when you look at DIY, you look at it through the lens of like fraudulent activity and data protection consideration. So who has access to the data? How many people can see the data? How many people can see the transactions going through the bank accounts, and how many people can track what other employees are getting in their monthly salaries? So they're the things you have to take into consideration there. And then also the fraud risk. So where do fraud risks come from? I suppose employees adding ghost employees to files and getting themselves paid more, or getting a friend of theirs paid. That is a potential fraud activity.
Surely people don't do that.
Yeah, supposedly it happens. I don't know. And also misclassifying employees is actually unintentional fraud, but fraud nevertheless, because you're not paying the correct taxes in the different jurisdictions. So again, that goes back to that experience and expertise. If you don't know what you don't know, you might be committing fraud without even knowing it. So while DIY would probably reduce the risk because you're only dealing with yourself and your banks, um, you have to watch out internally. Is there any risks of fraud? And then the biggest kind of component for me, or the biggest concern, would be the data protection. How many people can see this information, touch this information, or do anything with it? Because the last thing you want to do is for various employees to see everyone else's salary and knowing it and causing a bit of consternation internally within that. So I would say low risk, but a lot of manual and heavy effort on your side. And then in terms of data protection, is probably the lesser of the solutions to go with. As you move on, you've got your payroll providers running the payments on your behalf. That probably, I suppose, reduces the potential for fraud, because you're using their systems, their technologies, their perpetual validation, their checks from the payment partners to ensure that you're sending the funds to Michael McHale. That is the correct account to bounce back with that. You're giving all the correct information on time. You're protecting the data because it stays on the platform. It doesn't come back into anyone else's hands to assess or to review, bar the top end of the payroll teams. And then when the payments are made, it just comes back as a one line item or two line items on the balance sheet. So there's no individual names being given back out onto bank statements or anything like that. So finance teams or anything else won't know who got paid what. So that's quite a strong solution in that sense. Also on it, it's a legal term, and I don't think it's a very I don't even know if it is a legal term, but you have one neck choke is what they like to say. And what I mean by that is that if something goes wrong, you go after your payroll provider and they will fix it for you. And they have to fix it for you because you've entered into a contract with them to make this all happen. So you go back to what I call it, the insurance blanket, that you have the insurance blanket that once payroll is completed, your payroll partner takes over and they take the ball off you and run it to the, as we say in America, and I'm not in America, the end zone. So that's the idea of that second one. So I suppose when you're looking at fraud, that goes down because of all the checks that would be in place. And the data protection, again, would be very much secure and protected because it's not been bounced back onto bank statements, and it's not been given to various employees to upload into banking platforms as it would if you did it yourselves. Rolling on again, keep on the fraud and the risk side. Your payroll partner might say we have to use payment partners and in-country partners. So in this case, for me, there's a potential here of a slight bit more risk. And that risk is that you're using a third party. So it lengthens the chain of the payment. That means that there could be a time delay with that. And when there is extra factors involved, you have to assess that solution a bit more carefully. The good news is what your payroll partner should do is always have the due diligence done on all their partners long before you come near them. So it should never be a new solution that they're just looking at or they ask them for a once-off favor. This should be something that's very much regimented, regulated, and checked off with your payroll partner. And again, I go back to my first thing is one neck to choke. You ensure that you make your contract with your payroll partner, not with, we'll say, the individual in-country partner in that sense. So what you will get, yeah, go ahead.
And would you say that the potential downside to this is, or something that probably needs to be investigating if you're going to go down this route, is the cash flow implication? So involving the finance teams, the treasury teams
Yeah.
understanding if you're moving cut-off dates or funding dates at any,
Yes.
presumably there's an implication there, yeah?
Yeah, so with the payroll calendar potentially will be affected. You may have to fund in a major currency and pay it into the more exotic currency. So you have an FX transaction to kind of consider as well. And then you have, like, whether you like it or not, you have a risk and fraud potential, in that sense. But again, I go back to how to minimize, because you can never get rid of, but how to minimize is to ensure that your contract is always with your payroll partner. Because I know, and for a fact, and Neil, you probably agree with me, I prefer to go after a company that's worth billions instead of something that's worth a couple of thousand. So you have to trade for that. You would probably have to trade a bit more of an expense, but you will sleep well at night knowing that if anything goes wrong, you ring your payroll provider instead of trying to get hold of somebody in a far-flung country. And then your final one, and one that people, I suppose, historically, when you start off and you have, we'll say, various countries that you work in, and you might not employ a global provider of a service, you will have direct relationships with in-country partners. Okay. And it's not a bad thing, it's not a wrong thing. It's just that what that does is that gives you complete, I suppose, ownership of the solution, complete responsibility for the solution as well. And the downside is the fraud and the risk levels go way up, because if something was to happen and you're paying, a tax bill of 100, 200, 300,000 and it doesn't get paid and something goes wrong, you're looking to probably, go after a company that's probably worth 10,000. Are you going to get your money back? The likelihood is probably not. And am I talking doomsday? Yes, I am. Does it happen that often? No, it doesn't. But can it happen if you're looking at a level of risk and potential fraud that goes up here? And yeah, everyone has to be aware of that, because if something does go wrong, even if they didn't mean to do it, it could be still be the case that it happened. So I'm saying that they tried to make a payment, to put it into the wrong bank, it doesn't go to the tax authorities on time, you get fined. Whose fault is that? We thought this, you thought that. It was our mistake, but like, are you going to get 100,000 back out of, the local in-country partners? Probably not. So again, when you're assessing all of this, I would say that expense versus risk definitely has to be taken into account. Like when people go, let's do the cheapest, quickest, you'll find that they're the ones that go on fire most often in these cases. And the result is always, we should have just taken the time, did it a bit slower, and probably paid a bit more for it. Yeah. So my take from all of this is look for experience. So when you talk to providers, how often do you do this? Can you do this? Are you comfortable with this? Okay, don't get me wrong. If you're talking to salespeople, a lot of time they'll always go, yeah, of course, we do it the whole time. But like there is experiences in how long has the company been in
No offense
operation?
taken.
Yeah. I didn't point at you, Neil, did I? Look for automation and technology. Okay, what you want is touchless. You want to say that once I approve payroll, can I get the payment done without anyone else touching money? Do I need to push it? Does someone need to pull it? Does someone need to write a check? If you can remove as many of those steps as possible, you're going to have a lot less risk of fraud and a lot less risk of money going into the wrong direction. The
Cool.
chain of people in the chain, keep that to a minimum. So what I mean by that is, like, can you get the money from you to somebody to go to your employees and tax bodies? That's best. If you really want to super secure, it goes from you directly to your employees and tax bodies. So the chain does not need to be you to payment provider, to his friends, to somebody else, to employees. That is a cause for disaster, because everyone needs to get paid out of that chain. And the problem is that that chain takes time. And then you have a high level of 5 touch points along a solution, something can go wrong, a lot more than you think. So make sure that that chain is as small as possible if you're going into some payment solution. The one neck to choke is always the beauty. And I say that from a company I work with, and we try to minimize the risk for the client. We're acutely aware that there's enough pressure on payroll teams getting it done without them staying up late at night wondering did a payment make it. So we try and minimize that, I suppose, on all our clients, but at the same time, do not be afraid to ask for it. What are the guarantees? What happens if it does go wrong? And like, think of doomsday. Go from doomsday backwards instead of going, oh, this is great, everything works perfectly. Think of the worst case scenario and ask what happens next. What's disaster recovery? What happens if the money does go missing? What do I do at this point, that point? And very quickly you find out how resilient the company you're working with is. It's always an interesting metric for me. When people go, no, it never happens. That's always a case of, it hasn't happened to you yet, so that means you could be quite new. So always ask the questions. Don't be afraid to ask them. So
Only
that
needs
would
to
be my
happen,
kind of take points.
only needs to happen once, right?
Exactly.
Um,
Exactly. And
so I think we're going to move to a poll, Mel.
mhm.
No?
Okay, yeah, let me just bring the poll up. Okay, in 2026, what causes you the most concern when it comes to global payroll? Costs, speed, fraud, data protection, all of the above. There is actually an article, we got a press release from HMRC about fraud with a ICP. So it does happen. So that's on GPA Live. So when you're talking about that, and it's quite unusual for
Yeah.
us to receive press releases directly from HMRC on this. So it's quite an interesting case. So even now, it still happens.
Yeah, I mean, they're obviously concerned enough about it to bring it to your attention.
Yeah, yeah.
And like traditionally, Mel, people say, "Oh, it only happens in exotic countries." And no,
No,
that's no. We're getting smarter. Things are going quicker. And like when you think of it, when you go and you use technology, and that's a big player here. Like, does the technology you're using, does it check? Is it a constant check? Money data goes out and goes back in. Is that checked again before it goes back to yourself? It's interesting to start asking those questions because that's
Mm.
what you need to know. Like, where are the gaps where potentially somebody could insert something and
yeah,
could your technology pick it up? So again, don't think that, oh, I have France and Italy and the UK and Ireland. It's not a big deal. It can be a big deal in everywhere. So that's what you got to keep your eyes on.
and it's a different type of fraud to what it was 15 years ago.
Right.
It's moving on. And I usually like to hit a certain percentage, and we're not there yet. So if you haven't answered, if you could just answer for me, we're going to close the poll in about 30 seconds. But what do you reckon is going to be the top one on this one? What do you reckon is going to be the winner as such? So you got cost, speed, fraud, data protection, or all of the above?
I think all of it.
Yeah, I think maybe data protection. I think the data thing is just huge now. I see it because again, AI, and let's not drag that into the room just too early, but like, people are, websites are combing places the whole time trying to get, particular piece of information. I think that's the one that people are like, how safe is my data? I think that
Yeah.
is a huge one these days.
Yeah,
Okay.
even not getting into payments, but even, I mean, that data protection piece
Yeah,
it's front and center. I mean, any engagement I have with any company in any part of the world, the first thing off the bat is an NDA. That
Yeah.
never used to be the case.
Okay, well, thank you to the person that just answered on the poll there. So I'm just going to end the poll and I'm going to share the results with you.
fun.
I'm just going to run through them for the people that are listening and rather than watching. So we've got cost 6%, speed 5%, fraud 8%, data protection. I mean, that has come up the highest on the others, 14%, and all of the above 67%. So yeah, it's pretty much everything keeps everyone awake at night, I think.
Yeah.
What about touch
And
a
Neil
popular
and Neil
topic?
was right, which is very unusual, but yes,
It does happen from time to
it
time,
does
Mike.
happen. It does happen. I know, I know.
All
Okay.
right, cool. So, what does the future hold then? So, obviously, we've talked about, the history and how, this sort of the payments web, if you like, kind of came to
Yeah,
fruition through iterations, but and what's available today, and if you went out to market today. But let's think about going forward, because obviously this is an ever evolving market. There's
yeah.
a lot of changes, a lot of legislation changes, cultural changes, a whole raft of stuff, economic changes as well. So what would you say would be probably the first one that springs to mind? I'm thinking faster payments, probably.
Yeah, like instant payments, faster payments are always been requested by clients. And again, it's the payroll calendar that's the start and end to the requests. So it's can we give you the inputs on the 26th instead of the 24th? It's not necessarily the payment, it's the time. So can we save time in a payroll calendar? We need more time. So when you look at all the components of a payroll calendar, payments always is the at the very last piece and go, can we shave a day or two off this? So, like the piece for me would be faster payments and instant payments are, yes, they're coming. Okay. And the whole thing is in payroll, it's a good thing. And I think the quicker we could do things, the better. But at the same time, they also bring in risk. And what I mean by that is that if you make an instant payment on the Monday morning to pay staff on Monday and something goes wrong, then your payment is late. So now we have to fix a payment that was due now, and we don't know what the problem is, so we'll try and fix it. So it gives you a lot less time to fix. In most companies, I would say they build a buffer into their payroll calendar. So if something did go wrong, they have enough time to fix it before the payment is due. And I mean the full payroll. That's like we've got to know that there's an extra bit of time in there because I'm sure 90% of the people or people on the call today will have found, oh, we made a mistake here. Quick, ping the team, see can we hold that, see can we change that, see can we get this, held off. Or even simpler again, they send the funds to us and the funds don't arrive. When when they were meant to ride Tuesday morning, they haven't arrived. Reach out to the client. When did you send them? Here we are. They should be in today. Now the clock is ticking because we need to pay these by 12 o'clock. So there are times where people go instant and faster are the way forward, but you have to take into account that you still need time to fix things if things go wrong. Like if anyone thinks that payroll goes right first time, we have a first time right metric here that we use, but like it's always not saying it's not first time right, but you might have a nick or a tweak or something to make before it happens. Also, with faster and instant payments, not all banks are set up to do it. So if you took on saying we're going to use faster payments in the country or instant payments, say across the SEPA region, some banks where your employees have their bank accounts might not be set up for it. So are you going to tell them that you're going to pay everyone else on Wednesday and they get paid on Thursday, or you get paid, at a different time? Why, again, employees, and I think I'm right with this. I'm an employee. I don't care how you get me the money as long as it's there on the date that you say it's going to be at the time you say it. I don't get like we're going to introduce a new rocket ship to pay your. I don't care. I don't care what you do as long as that money lands in my bank account so I can pay my bills, my mortgage, have food, whatever it is. And I think that's the consideration that people need to understand is like, yes, we want to go faster, but think of what levels of risk that brings into the solution. We will get there in the next few years. Definitely, all banks will have these things. We will be able to shave time off payroll calendars, and internally ourselves, we're always looking at that. We're always like, can we not go quicker? Can we not go faster? And in fairness, those improvements are happening the whole time.
We have a question, Michael. We have a
Yes.
question in the chat from, I can only guess, what a far-flung cousin of mine, Mark McAllister.
Oh, yes.
Yeah, so bearing in mind the results of the survey and the risks involved, where do we
hmm
stand on minimizing risk by only working with your primary bankers?
Yeah, like, and when you say primary bankers in your main banks, uh, I'll answer it
Well,
in that assumption, or if Neil, if you have a different twist on that.
no, I was thinking the same thing. So if your primary bank is Citibank or
Yeah,
Santander, yeah,
it like there's pluses and minuses to it like that. So if you take in Spain, working with Bank of America in Spain, they block direct debits going to make tax payments. So like working with your main bank the whole time is a brilliant idea because of uniformity. But in some countries, if it's an international bank, sometimes like in India, you can't make the tax payments from it, or in Spain, the direct debit might not be allowed. So I would agree. Yes, I don't think you really want to be picking a different bank in each country the whole time because, like you said, then you've got different rules, regulations, logins, everything else. You can have a more uniform solution by having a primary bank and sticking with that. So yes, I would say that is a good idea or good practice if you can. But you need to have a relationship with them also. So it's no point in having 20 banks with Citibank if they don't come back to you in the required time that you want. So maybe a local bank, and I'm talking from an Irish point of view, some Irish banks are probably better than others at replying to you. So if you've got a good relationship, I would keep it. I wouldn't run away for that reason. But if you're starting out and you're trying to do something quicker, it's probably better to do what you have here, which is primary banks going along. I hope, Mark, that answered the question. If not, please give out to me or throw in another question. But yeah, I think it's a good idea.
I don't know if you guys saw that there's also one in the chat. So can I read that out as well?
Oh, yeah.
Are there any global providers that currently manage payments in Africa regions in local currencies and not USD or euros?
Wow.
I'll let
Wowza.
Michael take that one.
That is getting to
Specific.
Yeah,
That's really,
is, as I like to say in Ireland, Pacific, and I get given out to, but yes, it is very specific. No, are there? Hand on heart, I know there's a few that do local payments, and I'm talking about payment providers now. So what you got to separate here is payroll providers offering the service and payment providers offering a service. So I do believe there are payment providers offering a service currently out there. I do believe eBury are trying to be really strong in that market because they bought a few companies over the last few years to offer that service. Flutterwave are in Africa. They're a very good payments company, and they can do this. But again, Mel, the killer about all this is that it's the tax payments that are the ones that get people. And why they get people in Africa is because a lot of the time they have to be met out of the local office. They have the technology built to make them bank to bank, but they don't use that often. It's very slow coming through. Some of the countries have caught up. So yes, there are definitely ones out there that accept in local currency and pay in local currency for employees. For the tax payments, I still believe that you will struggle to find a global provider that can make them in local currency for your tax payments.
Thank you so much. Thanks.
Okay.
Cool. So faster payments is one thing. What about these? This is coming up more and more and more and more.
Yeah.
Getting contractors paid, non-traditional workers, gig workers, all that stuff that is now much more prevalent.
Yeah. Contractors is kind of the new way forward. I think a lot of companies are like, we'll just employ people, and we'll pay them their gross amount and they can go off and do it themselves. They can live in whatever countries they want within reason. And it saves a lot of hassle and effort on our side. So it it's simple for the payment side, and this is a real cop out for me, but it is. So for contractors, we pay them the gross amount. We don't have to take into account local taxation issues because contractors have to pay their own taxes where they're based. So all our job is to basically pay out the gross amount and let them take care of the rest. So I think for that reason, that's the way people are employing. We've got a few companies over the last few years, more on the tech side, that's the way they're going. With that is just making the payment to the employee. They don't have to do the other parts, the health insurance, the pensions, anything else. They just have to make a gross payment and run off. They don't have to file tax on their behalf or anything else. So it's a lot more popular way of doing it. And I think this is going to grow and grow, especially with global companies that want to scale quickly. Like, again, what's the negative of a contractor and non-traditional workers is probably the guarantee that they won't just leave whenever they want. That's, you got a contractor, but he goes, listen, I'm done. I'm going to walk away. Not saying that an employee can't, but it's just treated differently and feels different. Like, I think it's important to be an employee of a company. You feel part of it. You have the same ethics as the company. You should have a good fit to it. Where I think contractors will be definitely for themselves getting, what they want out of this agreement more than, I suppose, the employee working on behalf of the company. So yeah, that will continue to be a thing. I also think that, and we'll come to it, but I think it goes hand in hand with the likes of getting paid in different structures. So your stable coins, your cryptocurrencies, different stuff. I think contractors are a bit more sometimes tech savvy and they'll want payments in different methods or just in USD and not local currency. So while they pose great flexibility in terms of how you employ them, I think their demands in terms of how they get paid will come more complicated as we go on.
Are we seeing payment providers specifically tapping into this contractor piece and getting producing solutions that can manage that on the contractor's behalf rather than them relying on their accountant or whoever else
Yeah, I think it's trying to what contracts are trying to do is trying to maximize it for themselves. So
Yeah.
I think what you're seeing more is the fact that they don't want to be paid in the local currency. So if they're working from a country with it's lower upkeep in the country to survive, they want to be paid in US dollars. They don't want the fluctuation of an FX rate because it could be volatile in the currency. They'll take it in US dollars and then they'll transfer what they need locally to survive. So
Yeah.
it's more that side than anything else. And I suppose the stable coin, the cryptocurrency, will come on to in a minute of where it's going.
Yeah. But before that, the elephant in the room,
Hmm.
artificial intelligence.
Oh yeah.
So this is just going to say, so this was an interesting topic of conversation. When
Hmm.
we did a similar session in Dublin before Christmas, and there was I think we asked the question, who's actively using AI in their payroll process at some
Yeah.
point, the global payroll process, and quite a big show of hands went up. And then when you actually scratch the surface and scratch the surface, I think we ended up with two people in the room who actually have some kind of AI tool built in rather
Correct.
than
Yeah.
machine learning or just better use of
Mm.
data. So intrigued on how if we have any view on AI in terms of the payments piece specifically as part of the payroll process.
Um, do I? No, not no. I suppose here's the thing. Hands up, and it would be very simple. And Mel, it's not a poll. I apologize, but like it'll be a hands up situation where the amount of people that still have problem with cross-border payments, it's still a friction. So like we haven't even got to the stage of that being just a normal everyday process yet. We still have like going for talking back on the fraud piece again. What you see more and more with banks now is stopping payments, holding payments for a day, 2 days, when they're meant to get paid. So why is that? Well, we ran a check and this popped up. So we want this information. What was it? Can't tell you. Who's it about? Don't know. And that's very frustrating. So like we still have, in terms of payments, a long way to go to get to a level where it's an easy thing to do. Um, I don't know where AI can get involved in that too much at this moment in time, and maybe I'm ignorant to it, but like you still have to use banks, you still have to fund bank accounts, you still have to transfer that from one bank to another to get to employees. So I'd say people would be nervous about this, and we'll talk about it a bit more on the stablecoin and cryptocurrency side, but I'd say people are still a bit nervous of like, why would I introduce AI into this here? Because again, your salary is sacrosanct. It doesn't land on a certain day, everyone panics. Don't care who you are, what level you're at, everyone panics. So
Yeah.
AI coming into this, maybe on the what
For
we
me,
call perpetual validation or beneficiary checks might be able to speed that process up. Um, Also on the pre-scan, so you've the likes of Onfido that will do background checks on all the employees in a file to make sure that nothing pops up. So AI getting involved in that to check across multiple databases, yes, but that's still more on the fraud and risk and data checking rather than the movement of funds, as far as I
I
would see.
guess AI is not regulated as such, right? So
No.
it's a little bit of a black box, I suspect, in this respect.
Would you tick a box to say I'm happy for AI to get involved in paying me every month?
Is that to me or to everybody?
Yeah, to you, I suppose, or to Mel if you want. Um,
Um, no, probably not at the moment. No.
Unless you knew exactly what it
Well,
meant. And
yeah,
then if they gave
I'd
you a
need,
100-page document, then
yeah,
you'd be like, well, this sounds complicated, so I won't. So I not
yeah,
being ignorant to it, but I think at the moment in time we've enough stuff to fix without introducing AI into something that we don't get up and running as
yeah.
easy as
I
we
think
do.
where I can see a good application for it in terms of, interrogating data sources or, where are
Yes.
my payments? Why did this go wrong? That kind of stuff. And the sort of the bit before. So
Yeah.
almost, can you run a quick check on these 20,000 payments that are due to go out and pick up any anomalies, that kind of stuff. To me, that's more machine learning than
Yeah.
AI anyway. But
Yeah.
um,
I
but yeah,
think Mark in the chat hits the nail
yeah,
on the
so
head. It can only help preparing what you're about to pay. Correct, 100%. Like it's the validation of the data that really people are after,
correct.
which is a good thing. And again, going back to the fraud piece and going back to ghost employees, the more technology that you have in your platform, in your system, that can ping these things and go, that's not right, that's not right, and you would say getting them out, the better.
And it's kind of similar to payroll. A lot of the payroll AI tools, it's at the end of the day, you still need somebody responsible who's burdening the risk for actually signing that
Yeah,
payroll off,
exactly.
and there still
Well,
has to be that for the time being.
yeah,
Um,
and I think that's the piece though, wasn't it? We said at the last GPA meeting was, what is AI and what do you want it for? Because AI isn't the answer. You have to have a question first or a problem, and then maybe some component of AI can solve it. But saying I'm going to solve my problems with AI when you don't know the problem is scary.
it's very much flipping around a lot, and I agree. I was having this conversation with somebody the other day. AI is the solution, but what is the problem?
Exactly. It's what you call that Jeopardy in America. You
Oh,
know,
the question the wrong way
who
around.
is who?
Yeah,
Yeah, yeah, yeah, yeah. So they give you the answer, and you have to give them the question, which
yeah.
it's
But
fun for a game show, but
talking of fraud, crypto.
yeah.
So this is obviously has raised, and it's come up in a number of conversations I've had with customers. Can we pay in crypto, or what's your view on this? And it's I think it
Mm,
went through a bit of a spike. Would that be
mm,
fair to say? And it's kind of dropping
yeah.
off a little bit now, or
It's no, it's there. I think Bitcoin dictates the perception of cryptocurrency from week to week. Bitcoin goes up, oh, geez, we should be doing that. Bitcoin goes down, Jesus, it's a pyramid scheme. Bitcoin goes up, oh, that was my retirement scheme there, or my retirement funds. It goes down, oh, I only put 500 euros into whatever. It
Hmm.
depends on the day and the week. Cryptocurrency as a method to pay people, again, for me, being me, if I said to my wife, good news, I got my salary in on time, she goes, okay. Bad news is Bitcoin went down 10% today. She's like, why does that matter? Oh, I asked for my salary to be paid in Bitcoin. Right. That wasn't the smartest thing to do, was it? And I'm like, well, depends. So if you have a level of comfort with it, fine. But like, I think we discussed this as well in Dublin. Why wouldn't you just get it paid to you in your standard currency? And then if you want to buy Bitcoin, go off and buy Bitcoin, knowing all the risks and everything else that are involved. You do it yourself in your own wallet that's private yourself, that nobody's sending money into or sending Bitcoin into, would be my resolution. Tech companies, younger people that maybe don't need a lot of funds, and maybe they would like that. I just don't at this moment in time. What blockchain or what cryptocurrency technology solves for is speed. But we haven't reached the point where we know exactly if my employer takes US dollars, gives it to a cryptocurrency company, they send Bitcoin from their wallet to my wallet. Is that automated then that transfers back from Bitcoin into US dollars so I can use it, or it sits in Bitcoin until I transfer some out into dollars and then I can use it? How long does that all take? And that's the question. How much does it cost? Gas fees can vary depending on the time of day and the amount of people using the platform at the one time. So all of that factored in, it might go faster, but it might not be exactly what you want. So I still think we're very immature. I think there's 12 or 15 countries still that have banned cryptocurrency, and they're not mainstream countries in that sense, but like Egypt is one. So it's not like it's a crazy thing. Um, the what was it, Poland? That the president of Poland vetoed the what is the MiCA agreement. So basically a regulatory agreement for how you use cryptocurrency. I think it's the Markets and Crypto Assets Regulation, I think is what it's short for. He vetoed that. And now the government are scrambling to see can they unravel the veto. And your man's going, nah, don't like it, don't want it. It'll affect smaller players in the market, so let's not do it. Like, that's one country where someone just went, nah, I'm not having that. That's the president. We won't do it. And very quickly, you might be in jeopardy. So again, can you do it on a global thing? Not now. Will it be a thing in time? Probably to a very small percentage of people. So I don't
it's
think
probably
I
maybe
don't think it's a yeah,
we're
it's
thinking
it's
about
not for me.
exec
Exactly.
bonuses maybe, or
Yeah.
rather than core salary amount sort of thing.
Yeah, it was your man Beckham Jr., Odell Beckham Jr. that got his crypto or got his salary paid in crypto, and everyone laughed at him. It dropped by 20% and then it went up by 70, 80% and he made a fortune. But like I
But
ain't Odell Beckham Jr. I ain't got that cash and it's not going to be happening for me today.
well, yeah. So if I, you think about that, if you get your salary paid and it suddenly drops the next day by
Yeah.
20%, you're going to fail to
Yeah.
cover a load of payments. I'm not. I don't
And
want
the
to
other
wait 3 years for it to mature before I make it back. Do you know what I mean?
And I was looking through it. I think the IRS put out a study that like I think it's somewhere around 45, 50% of Americans aren't reporting that they have cryptocurrency and aren't reporting the gains because some of them have forgot about it. They've left it and they don't know. And someday they'll come along, the IRS, and send them a letter going, I believe you bought Bitcoin in 2006. It's now worth that. You didn't pay any of these years. You actually owe us whatever. So
A
like that's
lot.
also a factor that people are like, how is it treated? You know,
Mm.
some places give tax free for crypto, very few. Some are crypto friendly, some aren't. So like you're not sure of an asset class and
Mm.
how it's taxed. Are you really in control of it? I'd be very skeptical. And again, investing wise, everything else outside your payroll, knock yourself out. Get it in your get your cash in your bank account. Do whatever you want with it. That's good because then you're educated and you know what you're letting yourself into. The other way for me is just there's too many problems.
Yeah, no, I agree with all of that. So
Yeah.
we've got about 10 minutes to run. Just going to do a couple of takeaways and then we'll open it up for questions, I think, if there are any
I
more.
will throw in one last piece. Like stable coins will become a bigger thing. I think the uptake in stable coin is like of the overall international money movement market is only 1%. But the interesting point is from 25 to 26, the uptake has grown by 100%. So while it's very small, the demand is there. What people
Mm.
haven't figured out yet is how to utilize it in the most effective manner. So it's pegged to the US dollar, and that's a good thing. And you can move it very, very quickly, which is a brilliant thing. But it's only US dollar at the moment. So once more currencies come online, once it becomes more streamlined, if banks are still blocking payments for AML KYC checks and you can send a cryptocurrency with no volatility, well,
Mm.
I think you'll have a different conversation very quickly coming into play.
Yeah, I think so. I think so.
Hmm.
I'm quite happy to have my salary paid in every month at the moment, but not getting
Ah,
too
yeah, but
fussy.
sure. You should get that in the Brinks lorry with the big
Oh,
cash dumped in the driveway. So much
just a
of it.
simple boy, just a simple, easy boy. Um,
Um, yeah, these are
cool.
the takeaways for me,
Yeah.
anyways. And talking to clients and preempting discussions around payments. Look, payments isn't the biggest part of payroll. It makes up 5-10% of the conversation. Okay, and I'm aware of that, and I'm not saying but what's the famous saying? Miss a few payments and see do people know who you are. It happens very, very quickly. So the piece for people before they get involved in this is you got to know what your treasury process is and how it works. And I mean that globally. I'm not saying you can know it in every country intimately, but you got to know where are you going? Um you got to know what your treasury process is. Okay. Then you make that a little bit bigger, Neil. Go back to the 22. You can't get the help these days.
You've got two PowerPoints open, I think, Neil.
Yeah,
What's happened there? I didn't touch it.
you did.
It's not me.
Yeah, Mel, we get blamed. Understanding your vendor's capability is the second one, anyways, and that's about again, like I said, checking with them. Where can you make payments to employees? Where can you make tax payments? Do you do third-party payments for pensions and health insurance? Get that all down, get that information off them, assess that, right? And then build in the risk and the fraud kind of conversation with that. You know, oh, we just use in-country partners everywhere, or we just give you bank files, or we just do this. So what's the level of service that they give you? And then is there anything in that service that you go, that could be a risk, that's a concern. Go back to them and ask, can they improve the service, or is there any other options? And then based on all that, you can make a decision to go, right, our solution in these countries should be X, these countries Y, and in these countries Z. And then like I know it's hard to do and it's not simple, but like you're going to get improvements in terms of innovation, in terms of faster payments, in terms of maybe some countries are only a bank file solution, like LATAM's quite difficult, but your payment provider, payroll provider might be working on a new solution. So always be checking in with them to say, hey, we could still do with a payment solution in LATAM or APAC or wherever it is, anything moving. And a lot of the time you will see that innovation. It's happening quicker now. There's really, really good companies out there that are actually just doing payroll and what you call it, EOR payments. That's it. They're not doing, the finance, they're not doing the various, I would say, normal payments and with businesses. They're just doing payroll and tax payments. So they're out there now. The smarts is out there. The research has been done. So I would always have that number five in the back pocket to go, right, what's out there? What's next? I know it's a pain to do research, but if you have a good payroll provider, I'd always be leaning into them to go, look, we're doing a very small project. Can you do some of this heavy lifting for us? And maybe, make us look good in front of our leadership team.
Cool.
Um,
So I think in summary, paid people are
yeah,
happy people, right?
yeah,
So
exactly.
and thanks to Michael for sharing his insight on this. He knows infinitely more about this than I do. But to Michael's point earlier, payments is only a small part of the payroll process, but it's the one that your employees care about. That's why they turn up for work.
Mm.
The global complexities are obviously complex, and to Michael's previous point, the guidance and advice is out there, and one model doesn't fit all, and not all businesses are the same. So, do take that all on board when
Yeah,
if you're going out to market, or even if it's a regional thing or even a country thing, just do your research. That's
yeah,
it.
and Michael Baer has hopefully Michael, I pronounced your second name correctly. Yeah, he's asked about on-demand pay as well. Like
Ah,
it is increasing, um, and it's more increasing in different markets in the different industries. So in the kind of blue chip companies, that not as much because it's usually a monthly payment and it's a substantial payment that they don't need to dip in. More in the manufacturing, the hospitality side of things, it is happening more and more. What some companies are doing instead of having an on-demand pay is making the pay more frequent. So they're instead of doing a monthly, they're doing a bi-weekly or a weekly if they can, but then that creates another kind of issue.
but I've
But
also
yeah,
seen it
on yeah,
replacing weekly payrolls. And also, I mean, the on-demand stuff, I've seen it where it has horrific cash flow implications because you're
yeah.
pre-funding, and but you're also pre-funding effectively based on guesswork because the payroll calculation has not actually taken place. Then I've seen it done with things like pay wallets and things like that, where you're giving people loaded credit cards.
Hmm.
There's a whole raft of different ways of doing it, but for me, it comes back to the cash flow implication. That's how you funding it and what are the controls around it.
Yeah, and the other point was, I think in the Philippines, we had one client came to us and asked us about it, and they actually changed the pay frequency because some of their employees were going out to loan sharks. It was very popular
Yeah,
that they were getting money in between their pay dates and then paying it back with interest every time. So we actually changed the frequency of the payments, or the payroll to do that. Now it cost them a lot more, but they found that, they couldn't kind of stand by and watch that. We didn't have on demand, I suppose, Michael. That's another thing to call out, and it's something that globally we not wanted to go to for the, I suppose, the explanations that Neil gave, but in some circumstances, I do believe there is a case to implement it rather than just ignore or, like to say, move to a weekly kind of payroll.
totally agree. And I think it's choosing the right model, I
Yeah,
think,
exactly.
because there are multiple different models around this. But yeah, kind of goes back to, turn up, pick carrots for a day. Here's a bag of carrots as payment.
Yeah.
Back to route one. Cool. Back to you, Mel.
Okay.
Lots of good questions on there.
Oh, we got time for one. There's one more question that's come up.
Yeah,
The
sure.
umbrella and contractor industries have been doing
Yeah,
daily payrolls for many years, with many workers being paid up to 3 times a week. So
yeah.
I suppose it's not
I
a
think
question, it's rather a comment, isn't it?
yeah, and that's it. And like there are different industries where it's common, like we're talking about that, the heading of the contractors, like that's a different, I suppose, global payroll and employees, and then you got your contractors and you got your, seasonal workers and different stuff. You have to cater for that. But like as a global thing, you would have to be like acutely aware that that's going to cause serious effort on the global payroll team to be constantly doing payrolls, constantly checking in, constantly paying out. The administration, the reconciliation, everything else at a global level would be huge. So I think, yes, it could be unique to certain countries and certain industries, but I don't know if global companies will be looking to put something like that in place. I could be wrong. I usually am, but
I think
that would be my take.
I think there have been some companies that have done it in areas or regions rather than spreading it across globally.
Yeah,
But I think it's almost like a whole webinar we could do just
yeah,
on that topic, if I'm being honest, because there is so much to talk about on that. Anyway, but I'll stop waffling. But thank you. Thank you so much, both of you. I really enjoyed it. I mean, I'm glad that we ran the event in Dublin where you got to cover it, and I'm so glad that you guys agreed to run it online because some
yeah,
really great takeaway. Thank you. Let's think of another one we can run. Really,
yeah.
really enjoyed it.
And thanks for the interaction, everybody. Really
Thanks,
appreciate
everyone.
it.
Yeah, thank you.
Enjoy the
See you
rest of
later,
the day.
Okay.
everyone.
Cheers.
Thank
Bye.
you.
Bye,
Bye
bye,
bye
bye.
bye. Bye.